another video of Magna FX. In this video I'll be explaining how to calculate pips. For you to be a profitable trader, you need to have good risk management. The problem is a lot of beginner traders do not know how to calculate pips. They get into a trade without knowing how much they risk, therefore end up blowing accounts and making errors like cutting the trade early. In this video I'll be teaching you how to calculate pips and how to have proper risk management on a trade. Let's get into the video. This is an example of a trade that I took AUDUSD on the 19th of December 2022. So for you to calculate pips, you have to subtract the opening price minus your second price. Let me give an example. So let's say you want to calculate how many pips your stop loss is far away from your entry. So you subtract the opening price of a trade minus the price of where your stop loss is. Let me calculate this one for us. Sorry, let me just bring out my calculator. So let's open the standard calculator. Made a mistake, double clicked there. Okay, the calculator is open. Let me bring it up. So let's say my entry price was 0.6718. we leave out the last digit because it is a pipette. It's given to you by the brokers, by different types of brokers. They differ with the broker that you use, but the original price is these 4 digits. So make sure you always leave out the last price, the last digit. So 0.6718 minus, this is 0.6670. what do we get? 48. So this is the number of pips my stop loss is further away from my entry price. So if I opened a lot, let's say of 0.01, I would be losing $4 on this trade. You can see that this risk is good. If I had a $20 account, losing $4 can't really affect that account, because I know over a period of time the numbers will be in my favor. So let me also know the number of pips for my take profit. So my entry price is 0.6718 minus 0.6871, 153 pips. So I'm losing 48 pips to gain 153 pips. Very good risk to reward ratio. These are the type of risk to reward ratios that you should be using as a trader for you to be profitable in the long run. You have to lose less and gain more in the long run, because probability of you becoming profitable is way higher this way, because you win big and lose less. So we get pips, we keep pips. That's how it is. You go into the market, you get pips and you keep pips. Let me give an example of another trade. Hope you're understanding. If you have any questions, you can leave them in the comment section below. I reply to every single question. So let's go for this trade. Unfortunately, this trade was a loss. I lost out 48 pips. Yeah, so let's move on. Let me show you another trade. Oh, this trade was closed on the 20th. So mostly my trades, if my trade does not work out, it only takes 1 day for me to be stopped out. That's how I know that this wasn't a good trade. The trade was not in my favor. So this is another trade I took on the 23rd. So this is where I took the loss. Structure still maintained. We still stayed above this level, the 0.6675 level. So price here bounced back up, found some resistance here, came down, so I saw an opportunity to enter the market again here. So I entered the market at this gray banner here is the entry price. So the entry price was 0.66878. sorry, 0.6687. yeah, we only need to have 4 digits after the decimal point. Then for normal pairs, for USD pairs, then for the JPY pairs and gold, I'll explain to you later. So 0.6687 minus let's go for the stop loss. How far is my stop loss further from my entry level? So my stop loss is this red banner here, which is 0.6633. I would be losing 54 pips. So I do not go above 60 pips. If my stop loss is above 60 pips, I will not enter that trade. Then let's see how further my take profit is away from my entry level. So my entry level, what's our entry price on this one? 0.687 0.6687 minus the take profit, which is 0.6807, which is 120 pips. This calculator automatically gives us the significant figures, so the 0 here was excluded, but it's 120. So I would be losing less to gain more. In dollar sense, it is $12. So I'd be gaining $12 on this trade and losing $5. So I'd be losing $5 to gain $12, which is a pretty good risk to reward ratio, if you ask me. So it's 1 to 2 risk to reward ratio, which is a very good risk to reward ratio in the long run. So next, let's see how this trade developed. Alright, this trade hit take profit. It hit take profit somewhere around 04 when this candle closed. So I'm betting 04 GMT. So I'm betting in Zambia it was 6 hours. Yeah, 6:80. We're 2 hours ahead of the Greenwich Meridian time or London time. So the trade was closed on the 30th. I opened this trade on the 23rd and it was closed on the 30th. So this is a real life scenario of a trade. Trades do take long. It's just a matter of you sitting on your hands and staying patient. Trading is not a get rich quick scheme. If you have seen on the 23rd and 30th, this takes a lot of mental discipline and a lot of patience. So the trade came, I took some partial profits when it came here, and I drew this zone here to wait to see how price will react. If price was to break this level here, I would have closed the trade, but we still maintained the structure. It created a pin bar, started shooting up, and eventually hit my take profit, and I was immediately taken out of the trade. So the basis of me entering this trade is just simply structure. Everything is just structure. If you can see, price is making higher highs. So a high here, 1, 2, 3. So basically it's in an uptrend. So I would be looking to buy on the retracements. So you see a higher high here, right? A retracement, you buy, shoots up, take profit, hit, retraces again. So this is the trade that I took last time and I was taken out. You see, though I was taken out, this green candle still came, closed above this, closed above 0.6675. So meaning the structure was still valid. We ranged a little here, then we finally broke out, came back to retest, found an opportunity to enter the trade, and rode the trade until take profit was hit. So taking partial profits is also important. Imagine if I was greedy and just let the trade run, and if it came back and went against my direction, I would have left the market with nothing. But I took partial profits here. I still would have left with something from the markets. So taking partial profits, having a strategy of how to take partial profits is also important for you to be a profitable trader in the long run. Okay, so this is a gold trade that I closed on the 13th of December 2022. The first screenshot is on my phone, which is being worked on right now. But on this trade, let's calculate the pips. So let's calculate how many pips the stop loss is away from my entry price. So what's our entry price? 1778.6. we leave out the last digit, remember? So minus 1760.2, we enter. So 18.4 pips. So for gold, if I was to open the smallest lot size, it moves per dollar. So 1 pip is $1, 2 pips $2, 3 pips $3, 4 pips $4, and so on. So this, I was losing $18. Gold has more spread than these other currencies, same as US30 and these other indices like the Nasdaq. So we look at the pips for the take profit. 1778.6 minus 1821.8, 43.2. So I'm losing 18 pips, $18 to gain $43. Good risk to reward ratio for me, more than 2. This is how you calculate pips on gold. Let me also explain to you how I came to take this trade. So as you can see from here, price continued making an uptrend, higher highs. So previously I would have gone back, but I can explain from here. So you can see price is just making higher highs, going up, making higher highs. So I was anticipating price to come find support here, because this level is a very significant level in the past. So I waited for price to come to this level and see how price will react. If it was to break this level and come down here, I would have taken a trade here because of this wick here. A lot of buyers came in here. You see the long wick here. So I waited for price to react here. So after I waited for price to reach here, put on my Fibonacci correlating with the 61.8 Fibonacci level. Price created these inside bars, continued making these inside bars, then followed by an engulfing candlestick, and the moving averages also crossed over, giving me confirmation that I can enter the trade now. So this is how I entered the trade. Came into profit, found some resistance at 1800, significant level, a key level, round figure, came down. So this is also one reason that I don't like putting trailing stops. So you see, if I put a trailing stop here, I would have been taken out of the trade and the trade would have gone in my favor. Though these things may happen, this is life, but I prefer letting the trade run than putting a trailing stop loss. That's it for this video. You can find us on Instagram at Magna FX Institute. If you have gained any knowledge from this video, don't forget to like, share and subscribe. Leave a comment below if you have any questions. Thank you.